Happening now, the last ships from China bringing cargo unaffected by President Trump's massive new tariffs are sailing into American ports. So that means the countdown to supply shortages and rising prices has officially begun.
But I should note, there will be fewer ships and less cargo because it is simply too expensive for some importers to do business with China right now. So once those ships come into the U.S. ports, retailers have said that they have about 5 to 7 weeks of pre-tariff inventory. However, once that inventory runs through, and for smaller businesses, it will be less, those higher priced, higher tariffed items will make their way onto store shelves. And businesses will have to make a decision. Do they continue to place those orders with China at that higher rate, or do they choose not to bring that product in? And that is where you can wind up with a situation of shortages. Now, JP Morgan is projecting that they expect a 75 to 80% drop in imports from China this year because of these higher tariffs, especially around back-to-school items and holiday items, because Pamela and Wolf, those items are starting to come in right now and will be coming in through October.
Right, and just to follow up on that, you heard President Trump yesterday acknowledge that the price of toys could go up, that shelves won't have as many toys, dolls for kids. But it's not just toys coming from China that American consumers buy, right?
Yeah, in some ways it is, because this is the second decline in quarter that we have seen back to back, a decline of 3.6% in same-store sales. That is the worst since COVID in 2020, when people were told to stay home. And the CEO of McDonald says this is because of economic uncertainty, and they're just not seeing the foot traffic. I will say that it's not just McDonald's. You have Chipotle, you have Domino's, you have Starbucks, all reporting weaker earnings just because of this economic uncertainty, consumer sentiment declining, and consumers starting to pull back in their purchases.